I complete 1 year as Finance Minister today. I look back on the first statement made by me on August 6, 2012, and how we overcame, in good measure, the challenges outlined by me in that statement. An economy is made up of three sectors: agriculture, industry and services. In 2012-13, the three sectors recorded the following growth rates: agriculture 1.9%, industry 2.1%, of which manufacturing 1%, services 7.1%. Overall, it was 5% growth. What is the situation today? As far as agriculture is concerned, the monsoon so far has been very good. It is 16% more than the normal long-term average. In terms of spread, out of 36 meteorological subdivisions, 18 subdivisions received excess rainfall and 11 subdivisions received normal rainfall. The sown area of major crops is considerably higher for the forthcoming Kharif. For example, the total net sown area is 747.78 lakh hectares in the current Kharif season, as against 635.05 lakh hectares in the corresponding period last year. We therefore expect that agriculture will record a growth rate significantly higher than the growth rate of last year. As I travel around the country, I find that there is a high degree of optimism among farmers. At the beginning of the year, it was estimated that banks will provide agricultural credit of rupees 7 lakh crore this year, as against last year's level of rupees 5,75,000 crore. However, having regard to the good monsoon and the increase in the sown area, I am asking banks to gear up to provide agricultural credit in excess of rupees 7 lakh crore. As far as the services sector is concerned, the indicators for some services are positive. For example, the freight traffic of railways grew year on year by 4.9% in the first quarter of 2013-14. Exports of services have registered a growth of 13.8% in April-May 2013. Hence, I am confident that the growth rate of services sector will be as good as, if not better than, last year's rate of growth. It is the industry sector that presents a mixed picture. Bankers have told me that there is good demand for credit from commercial real estate, small and medium enterprises, and retail sectors. Credit growth to micro and small enterprises was very strong in May 2013 at 21.2% on year-on-year basis. Consumer durable lending grew by 21% in May this year. Housing loans were up by 17.1%, and commercial real estate lending was up 15.4% in May this year relative to May last year. However, demand for credit is sluggish from big industry. Indian industry, especially large industrial houses, must rediscover the sense of optimism and confidence that I find in the agriculture sector. I know that they are deterred by the fact that many projects were stalled. We are addressing the problem and have achieved significant success. The Cabinet Committee on Investment has so far cleared 157 projects with a total project value or investment of rupees 1,60,900 crore. The project monitoring group is tracking large projects and pushing for implementation. In the case of 20 power projects with an investment of rupees 1,60,000 17,814 crore and generating capacity of 23,190 megawatts, fuel supply agreements will be concluded by 31 August 2013. At the instance of the PMG, Ministry of Environment and Forest has granted environmental clearance in the case of 5 projects with an investment of rupees 9,658 crore. We must revive investment and industry must play its part. Industrial houses appear to be confident when they decide to invest abroad. The same confidence must be exhibited in order to invest in India. The price of credit is indeed high, but it is not so dauntingly high that it should hold back investment. The RBI's policy announced yesterday hints at easing of interest rates once the rupee stabilizes and there is reduced volatility in the currency market. Ample funds are available with banks. Bankers have assured me that the credit needs of industry will be fully met. If anyone in industry finds that his or her credit needs are not being met, he or she may come to me and I shall put him or her in touch with the banks. I think it is a truism that it is only domestic investment that will bring in its wake foreign investment. Last year, the concern about fiscal deficit was uppermost in everyone's mind. I promised to tackle the fiscal deficit and bring the economy back on the path of fiscal consolidation. We have succeeded in large measure, and the fiscal deficit for 2012-13 was contained at 4.9% as against the earlier target of 5.3%. The current account deficit was also a problem last year. Nevertheless, we not only fully and safely financed the current account deficit of about $88 billion, but also added $3.8 billion to the reserves. This year, again, I promise that we will tackle both deficits. The target for fiscal deficit is 4.8%. It is a red line and it will not be breached under any circumstances. As far as the current account deficit is concerned, thanks to the steps taken so far and some more steps that are on the anvil, we expect that we would be able to fully finance the current account deficit this year too, and we will not be obliged to draw down on the reserves. As you are aware, we have taken some strong measures on gold imports. In June 2013, gold imports were down to 31 metric tons, and up to July 25, 2013, it was 45 metric tons. We hope to contain gold imports at a level well below last year's total imports of 845 metric tons and save a considerable amount of foreign exchange, which will have a positive impact on the current account deficit. A number of steps are underway to augment exports. There are some signs of export pickup. For instance, in services, exports on a net basis grew by 35.66% in April-May 2013. My colleague, the Commerce Minister, has announced a number of measures. I have offered him full support and provided today additional funds of rupees 2,000 crore. This will include increasing the interest subvention from 2% to 3% on certain exports. Simultaneously, we are looking at some compression in non-oil and non-gold imports, especially of non-essential goods. We have also decided to exercise some options to increase the inflows and add to the stable financing of the current account deficit. The government is actively considering significant liberalization of the FDI policy, which would further increase long-term foreign investment. We will ask some public sector companies to raise funds abroad. We have also decided on some measures to attract longer-term NRI funds. Talks are underway with long-term investors such as sovereign wealth funds and pension funds. In consultation with the RBI, we propose to liberalize longer-term ECBs in a sustainable way. We are also actively considering other measures. Taken together, we are confident that we can ensure stable sources of additional financing for the current account deficit. When the global economy is challenged, the Indian economy will also face challenges. It is the challenges that should bring out the best in the people, especially our farmers, manufacturers and service providers. I'm an eternal optimist. Just as we consolidated the Indian economy in 2012-13, I'm confident that we will take the Indian economy one rung higher in 2013-14. We are looking forward to a growth rate of between 5.5 and 6%, and we will take all measures to achieve that goal.